So is there a stock market correction? Is it time to panic? I'll answer that question, plus do my regular weekly market analysis, do some market scans in search of opportunities, and look at the trade of the week on WKHS. Okay, so for a number of weeks we've been looking at whether there is a stock market correction underway. And this past week we had a fair bit of volatility, and I think a lot of people wondering, is it in fact the start of a correction? Is it time to panic? The market has dipped below its daily upward trend line a number of times this past week. However, each time it has managed to make a late day comeback to hold support. And so we have to ask, is this a cue to sell stocks ahead of a correction? Well, typically market corrections usually start with a strong down day, often after a falling top. And we really haven't seen that yet, and therefore I think it's time to stay calm. If we look at the charts here, you can see that the upward trend line is still just barely holding. We were basically right at it where we closed. It's not like what we had back here when the market corrected and sent stocks sharply lower. We don't have that strong rush to the exit door that tends to signal a break of the upward trend. We've been hanging out at the upward trend line, but we really haven't made a decisive break of it yet, and so I don't yet think it's time to panic. All right, moving along, let's do our regular weekly market analysis, starting off with a look at the US markets. And here is a 30-day, 30-minute chart of the SPY, and you can see the volatility that we had this past week and that downward sloping channel. You might argue that we've broken that. I would say that we're actually just risen up to the top of the channel. The question is, will we break it next week? We had a great comeback on Friday. That's encouraging. But a lot of it's going to depend on what happens with China-US trade over the weekend and whether there are any positive bits of news that come out on that. So we'll have to keep a close eye on it. I think one thing's for certain, we're probably going to have more volatility next week. Looking at the 3-year weekly chart, there's our sort of indecisive dribble down through the upward trend line. You know, it's questionable whether we're through it. I think we're essentially at it, you know, maybe slightly below, but really not a strong break of the trend line again, like we saw back in October, which started that fairly substantial correction that we had into the end of December. So no need to worry yet, but certainly important to be cautious because we are showing that nervousness around the trend line. Looking at the small caps, we've got this nice ascending triangle pattern building, and ultimately we're looking for a breakout. We tried to break there, didn't really have a lot of volume behind it. We've pulled back. We're still holding this horizontal line of support. Again, the market just nervous, doesn't really want to push stocks higher, but the sellers aren't all that motivated to push stocks lower yet either. On to the Canadian markets. Here is a chart of the TSX 60, and you can see that broadening pattern that shows greater uncertainty. So with volatility comes uncertainty, and you'll notice that the volatility is increasing as we go through time, and that just shows investors' nervousness about, you know, what's going to happen on China-US trade. That's really the critical thing. So we did break that upward trend line. We are now drifting lower, but in the context of that 3-year weekly chart, this is not really unreasonable. We broke out. Typically when you break out from volatility, you often get a pullback, different than if you break out from low volatility. And so I expect that we're going to kind of grind our way sideways here. The question really comes down to whether we make that strong, decisive break to the downside, something that we have not yet seen, and therefore remain cautiously optimistic about Canadian stocks. On the small cap, or call it micro cap side of the Canadian market, we are moving into a little bit of a downward trend here, and therefore I think it deserves caution on this market. We've got a number of areas of support. That one's been broken. The next one is here where we are trying to bounce. We had a little bounce back on Friday. Will we hold that? If not, I worry that we may be heading back to those lows. So I do advise some caution with those speculative TSX venture stocks. On to currencies. US dollar, of course, has been strong, but in the last 2 weeks it's had a little bit of a pullback. Not unreasonable given the pattern. We're still inside that upward sloping channel. We're actually at the bottom of the channel. So the US dollar should bounce in the next week or two, and we'll be watching for that as a confirmation that the trend is ultimately going to go back to those highs from late 2016. Canadian dollar, you know, a lot of people arguing or wondering why the Canadian dollar has been so weak. I read comments from the head of Scotiabank this past week, again, wondering why that Canadian dollar is so weak. I don't really care why. The fact is, it is weak, and until it breaks the downward trend line, we should not be bullish on the Canadian dollar. Now, again, as I said last week, it's building a rising bottom, so it has something going on, but until we can break that downward trend line, remain bearish on the Canadian dollar. On to interest rates. Bond market made another little tick to the upside last week. We've had that breakout, pull back, and we should now continue to move higher, and that means interest rates should move lower from here. On to commodities, we always take a look at gold, and of course gold has been in a pullback, but the intensity of the pullback is lessening. That's called a falling wedge pattern. And what it means is that the sellers are actually losing their motivation. And I think what's going on here is people may be looking for gold as a bit of a hedge in case something goes wrong on trade. And if that happens, we'll probably get a breakout from that wedge pattern. If there is a good US-China trade deal, I expect gold will continue to move lower. And so it'll be a good sort of canary in the coal mine for the overall market. Let's watch this. If we can break out of that pattern to the upside, we may actually get that surprise move back up to the highs. There is no sign of that yet, so don't be buying gold yet, but it is something to keep an eye on in the near term. And the oil chart, we have had a few weeks of profit taking. The upward trend is still in place, kind of barely, just like on the stock market, but we haven't broken the upward trend, and we're actually showing a little bit of signs that we may turn around from the last 2 or 3 weeks of weakness and start to head higher again. We'll have to keep a close eye on this one. If we can break to the upside from here, bounce off of the trend line, then we're probably going to try to make that run up toward the highs from late last year. And finally, the fear chart. Fear took a little bit of a jump this past week. We had that volatility, but by the end of the week, it was falling off again. I think that's an indication that investors really do expect some good news on China-US trade, but of course this can change very quickly with just a tweet from the President of the United States. That could do it, and so we'll have to keep a close eye on the market. It's going to be volatile, whether it's good or bad, and we'll have to keep a close eye on that. So my ratings then, neutral long-term on US and Canadian stocks, but bearish short-term as we are seeing that pullback, some profit taking from some really good runs for the market since the end of December. Gold still bearish long-term, but I've upped my rating to neutral short-term as it is showing some stability. Oil neutral long-term and bearish short-term as it is pulling back, but it is at a point where it should bounce. Let's see if it does. The market is showing nervousness in anticipation of news on China-US trade. Both buyers and sellers really seem to lack motivation to create breaks of resistance or support. The sellers can't break the upward trend line. The buyers can't make that break through horizontal resistance. Gold is stabilizing as a hedge against a failed deal, and that could be a signal of what's going to come. Oil's upward trend is stalled, but it still has not yet been broken, and fear is falling again at the end of last week. All right, so let's do some market scans. We'll jump over to the Stock Scores website. This week, I'm going to run the abnormal break scan on the US side, and we'll see if we can find any good charts. This particular scan looks for stocks making abnormal price moves with abnormal volume, and then we inspect the charts to see if they have good chart patterns. Here's one that has some promise. This is WPRT, which was a good day trader on Friday, and it's broken through that resistance from this little pullback here. Very strong volume, very abnormal price action. That's a good long-term turnaround chart. The move on Friday was so intense that it wouldn't surprise me if it pulls back before it goes higher, but I do like the stock looking out a few weeks, although the next few days will be critical as to whether it starts to make a bit of profit-taking motivated pullback. Moving along, just keep cycling through charts, and I'm looking for specific patterns. We have a bottom fishing pattern, we have an action breaks pattern, we have an abnormal breaks pattern. Here is SunPower, SPWR, had some long-term resistance right in here. I've lost my drawing tool, but you can see the breakout. That's sort of a cup and handle pattern that goes back to September of 2018. Very strong volume. I'd give this a 6 out of 10 based on this chart, but let's take a look at the 3-year weekly chart. Yeah, and I'm going to stick with the 6 because there's a fair bit of resistance in that $10 range, and I think that's going to limit its upside. On WPRT, I'd give it a 6.5 out of 10. I think it's a little better. Still not great because of the intensity of the break. Continuing along, looking at, again, each of these charts. This one looks not too bad. Volume, a little bit of a jump up, trying to break out of this trading range. It's not a real clear-cut break. Let's take a look at the 3-year. Yeah, there again, I give this a 6, BBDC, a 6 out of 10. It's got a pretty good dividend yield, 4.8%, historically anyway. No guarantee that that will continue, but that is the historical yield. VFF was a huge winner in the last few months, and it's been in pullback mode. It broke its pullback on Friday and did so with some pretty good volume. So that's a sign that it wants to try to make its way back to the $17, $18 range. It's not as conclusive a pick when that happens, and so we'll have to see if it can hold that gain, but certainly something to watch. So continuing along, SWIR has broken out a little bit of a long tail there, going to run into some resistance there. I'll give that a 6 out of 10. QNST rather, nice abnormal actions, positive sign, but not a very good pattern. I'll give that a 6 out of 10. FLY, too far into the upward trend. I just continue to cycle through these charts looking for the patterns that I know to be predictive. We've got 1.5 more pages to go. The CDLX, you can see the abnormal action there from a lengthy sideways trading pattern, good volume. Let's take a look at the 3-year chart. It has a break of a downward trend line, quite a bit of resistance at 28, so I'm going to give that a 6 out of 10. Continuing along. GTHX, nice break through this resistance level. Again, couldn't hold the gains of the day, and that's always a bit of a weakness. That means investors were selling into the close, and so you can see the highs were made in the morning. It was relatively stable into the close, just off of the highs. I think I'll give that a 6 out of 10. You know, the 7s are the ones that I really like, and I haven't seen yet a 7. This XNCR breaking its downward trend line from a little bit of volatility. Again, nice spike in volume. Let's take a look at the 1-month chart. That's pretty good. That's probably a 6.5 out of 10 as a longer term position trade. And I think we're just about done here. A couple more to go. There's 3 on the next page, and then we will be finished our scan. And I don't see anything else there. All right, so on to the trade of the week. This week we had this awesome mover right in the middle of the day, and this is the reason why you watch the market all day long if you can. Sometimes you get these surprise moves that happen in the middle of the day. You can see the first pink dot right before 11:30. That was the signal that this stock wanted to go higher. It didn't require a lot of capital because it was such a volatile stock. So for $100 of risk, it only required a 900 share position, which was $873 in capital. Not a marginable stock because it is under $3. So it would require $870 including or without any kind of use of margin. But this trade earned a 15.2 RR. That was a $1,500 gain on an $870 investment for 171% return in just a single day. And that was on the back of President Trump actually tweeting something about this company, and that really helped it to move higher. Well, that has been the Stock Scorers Market Minutes for May 13th, 2019. Hope that you have a great week in the market and trade well.